Hi, and welcome to our 5-minute tax update for September 2017. After a well-deserved break in August, the Cyprus Tax Webcast team is back with its monthly tax updates, full of energy and enthusiasm to bring to you the latest developments in our tax environment. Maybe a brief mention and thank you to the contributors of our tax webcast series, to Michael Aris Mihalidis, in charge of the technical content, assisted by Stephanie Savidis, who is the person behind the legislative research, Mary Mihailidou, in charge of marketing, and our camera and sound technician, Mihalis Kalobedis from SDEM Media. So without further ado, let's set the countdown clock and start. A tax bill has been submitted to the House of Representatives for an extension to the law for the settlement of overdue taxes. The political parties have yet to agree, however, how long the extension should be. More specifically, the bill provides for an extension to the deadline for the submission of applications to enter the scheme for existing tax liabilities, with some parties suggesting the current expiry date of 3rd of October to be extended to 3rd of January 2018 and others to 3rd of March 2018. In addition, the bill introduces a deadline by which all income tax returns of the applicant must be submitted for all years up to 2015 in order to be accepted to the scheme. The deadline suggested by certain parties is the 30th of June 2018 and by others the 30th of September 2018. We expect the decision to be taken and the bill to be voted in today's session of the House. On the 22nd of September, the House of Representatives voted a number of amending laws which extend the exemption from taxes and charges resulting from the restructuring of loans. The relevant exemption was voted back in 2015 and was in effect until 31st of December 2017. With the voting of the amending laws, the exemption is now extended until 31st of December 2019. The exemption applies to the following taxes: the income tax, the special defense contribution, the capital gains tax, the stamp duty, the VAT, and the land and surveys department fees, as well as the collection of taxes law. Let's now have a quick look at some other tax bills that have been submitted to the Finance Committee of the House of Representatives for discussion. An amendment has been submitted with respect to the income tax law on the treatment of losses when a banking institution transfers its operations to another banking institution under the Resolution of Credit and Other Institutions Law. The proposed bill provides for the treatment of accumulated losses as a deduction equally spread over 15 years and abolishes the current treatment under the loss carry-forward provisions. In addition, it provides that any losses which have not been utilized in a particular year will be transferred to the next year. The law will have retrospective effect from 2013 onwards. Another bill proposes an amendment to the capital gains tax law. The current law provides for an exemption on the disposal of immovable property that was acquired between 16th of July 2015 and 31 of December 2016. With the amendment, it is intended to extend this exemption until the 31st of December 2018. However, we understand that the decision on this bill will be taken together with the changes on the VAT on immovable property. Is Cyprus the next best thing to Hollywood and Bollywood? Well, interestingly enough, the government has recently announced its intention to submit proposals for a number of incentives that would encourage film and sound production companies to set up business in Cyprus. The main provisions announced include a cash rebate or a tax credit for companies that meet certain conditions, a tax deduction for companies that invest in film infrastructure and equipment, and a reimbursement of VAT on eligible costs. Projects submitted for funding will be evaluated against specific criteria and approved by the Ministry of Finance. We will provide more details of this interesting initiative once a formal bill is submitted to Parliament. Lastly, we will briefly look at two circulars issued by the Tax Department in August 2017. Circular number 5 provides a clarification to the previous Circular 8 of 2017 issued in March this year. It clarifies that the residency certificate issued to individuals who have not completed 183 days in a tax year will be issued only for those who have foreign income from interest and dividends and not from any other sources. Circular number 6 informs us that the tax authorities will temporarily not be able to issue expedited rulings in connection with back-to-back loans. This is due to the uncertainty that currently exists around the new rules introduced that require a transfer pricing study. So effectively, you can still apply for a normal ruling, but it is expected to be responded to with some delay. We will close off today's tax update with a brief reminder of the upcoming deadlines. 30th of September is the deadline for the electronic submission of the 2016 personal tax return by salaried individuals and individuals who do not prepare audited financial statements if their gross income exceeds €19,500. It is also the deadline for the payment of the third installment of the special levy by credit institutions for 2017. This concludes our tax update for this month. Thank you for watching.